Awesome. All right, excellent. All right, welcome everyone. Yeah, so another couple of good moves this week. Hey, we've got some pretty good action going on in the markets. We're going to check out a few of the bits and pieces, and then we'll get to some of the questions. We've got quite a few of those as well. It's really good. Is there anyone who has got a trade that they want to check out straight off the bat? Anyone in something they want to have a quick check out on? Any trades of interest? I know a lot of people are in the Aussie, and I know quite a few people are shorting the CAD, which is, we'll look at that in a second. We will look at the CAD in a sec. Is anyone long the Aussie at the moment?
No, I got out when it hit 71 cents.
This zone here, yeah?
Yep.
Yeah, spot on. Good zone. Yeah, good zone. You'd have to be pretty brave to be gone to pushing harder for that, because like realistically, like you got your roll reversal, you got your 20 moving average. I mean, it's not to say that it can't go further, but I look at it on the weekly, and then I see a 200 right in its face on the weekly, as well as that roll reversal zone that we've got here at this level. So, look, if you've been able to capture that long, I reckon that's great, but it's probably going to take a bit of a breather here. And we're going to find out all about where this pair's going very soon. Don't worry about that. Like, we're going to know whether this one's actually in for the long haul. I mean, if she pulls back and makes a lightning bolt from here and breaks up higher, then the sentiment's definitely changed. Whether that's going to happen, it's got a bit of work to do. I don't know. For me, it's if you're going to long it, I didn't personally. If you're going to long it though, I think the long is probably played out for you. So you probably, at the very, very least, you should have taken some profit, I would have thought. Have you got any in at all, Dave, or are you just you taking it all out at this point?
No, I closed the position entirely. I thought it had reached its, well, as far it was going to go. I got out at 71,744. I just had a quick check. So,
nice.
Yeah. So I didn't think it could go much higher, and it was sort of formed the double top on the hourly after that, and couldn't break up through it. So, because I was nearly going to get back in.
Yeah.
But yeah, I got in.
It's a sexy double top, actually.
Yeah, I was watching it on the hourly. I got in when it broke above the 200, and I pretty much took it out just at that top of that green wick, or where the base of the wick is on the last green candle there at the top.
Yeah.
No, the first one, this to the left.
Oh, here?
Yeah, there. Right there.
Right. Yep. That's good. Yeah. That's good trading. You pretty much got you got the most out of it, really. I mean, look, if you didn't take it there, you'd have to be concerned here. I would have thought. I mean, that's a dead set double top. There's no question about that. At a place where it's one of those ones where I sort of look at it and say, well, technically speaking, we are, it's reversing a trend. Okay, it's reversing the short-term trend, right? So you say to yourself, we always say double tops in the direction of the trend are the best double tops to take, and it's true. What I find with these ones, and they're an interesting. We'll have a look at it. You say, all right, but isn't we're definitely in an uptrend on the 1 hour? There's no question about that, right? Obviously, we've got a series of higher highs and higher lows, no question. So is that double top representing the trend on the 1 hour, or are we going to use it to represent what's actually happening on the 4 hour, or are we going to have a look at that on the bigger picture and say what's the bigger picture doing? Okay, so my general rule on that, because I know it can get a little bit confusing, you say, well, which pattern is it actually representing? Which time frame is it actually representing? So my rule on that, for me, my personal rule is I always go back to the daily and say, what is the daily doing? What influence would that have on the? Now I look at it. I look at it this way. I look at it and say, all right, this has been a very, very big systematic sell-off. No question about that. It hit our zone down here. It's pulled back like you would hope it would. It's not going to fall. It was never going to go through the 70 without some sort of pullback. There's no. It's not going to do it. The 70 was way too strong. So, but if we measure that move, and it's a big move. Like if we do a fib, I'd say it would be it won't be a 38.2, but I'd say it'd be a 20, probably a 23. I can find my fib tool. I'll find it somewhere. I keep shuffling these stupid things around, and then I lose them. Hang on. I can't wait to get to one platform where it's just actually going to. No, it's not there. I keep hiding it. Where's my tools? Hang on a second.
Third icon on the right.
I can't. Why can't I find it? Am I going mad? Hang on. I'm going mad.
The right one. The right one, man. More. Yep. Yeah. After. Yeah. That's after the T, or before the T. Yep. That's.
Has that changed? That looks ridiculous. Anyway. Oh dear Lord. All right. So it's past the 23.6, in between the 26 and the 38.2. Hasn't quite reached the 38.2. Let me just zoom this out a little bit. Hang on. There. Hasn't quite reached the 38.2, but it's bloody close, right? So it's on the 20 on the daily. That's a concern. It's at a roll reversal. That's a concern. So although, we look at the 1 hour and we say, all right, it is a double top, but the 1 hour trend is going up. There's enough compelling evidence to say, well, we know the 4 hour, obviously every time frame is going to be at resistance. Clearly, because of the daily resistance that we know is going to spread right across. We know that there were an important fib zone, or close enough to an important fib zone. We've got the 20 moving average there as well, stopping it. So I give that 1 hour a lot more weight. Now, if everything else was different, and say the daily was actually in a uptrend, and the 4 hour was in an uptrend, and the 1 hour is in an uptrend, and we see the double top, I'm going to give it a lot less weight. Okay, so I'm still using the prevailing trend, being the 4 hour and the daily, as a reason to say this is going in the direction of the prevailing trend. Even though the 1 hour, this is not the prevailing trend, right? We know that, yeah? Okay, everyone gets that, right? We all know that?
Yeah, it's a counter.
Yeah.
Counter trend trade.
Absolutely. This is the noise inside a bigger trend. Okay. So when we say we like to trade patterns in the direction of the trend, some people get confused and think, all right, we've got a double top, but how's a double top going to be in the direction of a downtrend if it's actually formed a double top? It's a double top in the greater direction. That's what we got. That's what you got to look at. So that is definitely a downtrend. That is still a downtrend, even though it's had a big pullback. It's still in a technical downtrend, even on the 4 hour. Why? Because we haven't had a lightning bolt yet. So this is just an interim counter trend. So that is still in the direction of the bigger trend, and at a very important roll reversal. Did I see a question on how we would enter this? So Dave, what was I going to let you do? Sorry.
Javid was asking if I could describe my thought process on entering the trade.
Yeah, go on, do it. I love it when people give us their thought process. Which time frame do you want me to go to?
Well, you can leave it there if you want, really. But I mean, when I was looking at the trade, I was flicking through all of them. I was also looking at the DXY and the dollar and gold as well, actually, because
yep.
I mean, just to make sure I was getting things right. And I thought with the dollar pulling back a bit, and I missed the move from the 20, and I only spotted it when it had come up to the 200 there, and I saw it had got above the 200, and I looked at the resistance over to the left, and I had a look at the daily and the 4 hour and made sure I didn't see any real impediments to the trade there. And I thought, well, it's going to hit that resistance. And I've got an indicator on my MT5 that gives me where the daily and the 4 hour and all those moving averages are for the daily for the 4 hour daily and weekly. So I saw that the 20 was daily 20 was coming down and was going to hit that level. Yep. With the where the role reversal is, and you can see the 2 wicks over to the left. That's sort of where I based that my idea of where the resistance was, plus how the daily wicks there have come up to the resistance and then reject, or support, resistance because it's above, and rejected off. So you've got those rejection wicks there. So I thought that'd be a fairly strong zone. And with the daily 20 there, I thought, well, it's not going to just push through that. It'll probably reject off it and come back down. It might bounce again and have another crack at it. You never know. But I figured I didn't think it was going past that. So that's why I set my take profit there. And and also I looked at the MACD and a couple of other things that were in its favour. So on the hourly at the time. So I thought, no, I'll give it a crack, because I was also watching that and watching the Kiwi because of your New Zealand USD trade, or the trade idea on the Tuesday Market Watch. And so I was looking at the Aussie and I thought, well, it looks bloody stronger than the Kiwi, you know. So I actually entered that one first, and it wasn't, the Kiwi didn't break above that level that you talked about until later that night sometime, and I'd set a pending an order up there and it tagged me in, but otherwise I would have missed that one. But yeah, no, I was pretty happy with that trade, and it was like I pretty much got in on that green candle where it's
over here.
Yeah, bit left, no, bit left, bit right,
Right here.
That one where it's made the new high. Well, I didn't quite make a new high over the red wick, but I kind of FOMO'd in, and
yeah, I can see that. That's fair enough. I can understand that. Yeah, you would have been afraid that it may not come back as far as you needed it to, and I can see why. Look, at the end of the day, entering here is clearing here, and that's okay. You knew you were past those key zones that you needed to break past, and it already had a fair bit of momentum up its on it. So look, that was that was perfect trading, really. I mean, at the end of the day, you knew exactly where to take it out, and I think a lot of people get caught when they trade. Entering can be the easy part. It's actually knowing when to exit and knowing when the right level is. So I mean, you're entering here, and you know that you've got a good, you got a good range to go to. So you've got a reasonable length to go. Okay, you've got that up your sleeve. You've got about 50 pips, and you're going to have trouble there. What a lot of people don't do well is identify that this is the place you need to be taking it out. And then it'll do this, and it'll come back down here, and then you'll be like, oh shit, I better take it out. But it's already nearly back where you entered. You're like, if you had a break even and you've just been taken out. That's the sort of stuff that you've got to look out for. So that was really good, Dave. I mean, that's exactly how you need to understand where to put your stop loss, where to put your take profit, because entering can be the easy part sometimes. I find with people who are trying to learn how to trade, they think the take profits will take care of themselves. And they've got to really focus on the entry point. The take profit doesn't generally take care of itself. You need to know where the take profit's going to be to give yourself, well, one, what that does, it makes sure that you've got enough juice in the trade that's actually going to make it worth it, right? Really, really important for starters. And then, of course, in my mind, stop losses are easy. The stop loss is probably the easiest thing to do because there's predetermined rules around it, right? We know that you got to go below the last swing, or you got to go behind a key candle, or whatever it is that is the pattern that you're trading. To me, that's the easiest. The stop loss is just standard, right? Take profits are a little bit more subjective, because take profits you have to actually use your brain a little bit. Where stop loss you don't have to use your brain. You've got all the rules in the course for that, and they all make sense, right? So that to me is actually the easiest thing. Someone who has no idea about trading, who just says, you know what, leave them with me for an hour, I'll show them where to put a stop loss. I can assure you that after an hour, they will know exactly where to put a stop loss for every trade they place, because there's hard and fast rules around it, okay? Take profits are not as easy, because take profits require a little bit more analysis. They require understanding levels. They require so much more than just placing the stop loss. Does that make sense to everyone? Because a lot of people focus on the stop loss, and they probably shouldn't, because it's actually a wasted it's wasted brain energy, because stop losses are predetermined. You know what I'm saying? Everyone understand that?
Yeah, you've got to. There are only certain spots you can put it safely.
Exactly,
anyway,
and there's only really one right place to put it. You don't want it too long and you don't want it too short. But if you put it in the sweet spot every single time, you're not going to have too much drama, right? That's just how stop losses are. But take profits are far more subjective, because take profits, someone may not see this resistance, and they might be going for 100 pips instead of 50, and they can really screw up what was effectively a good trade by actually having a stop loss too far away. And all of a sudden, it's gone from being a really, really good trade to a really, really ordinary one, because you've actually mistimed where your take profit should be. So yeah, you need to spend more time focusing on take profits and entries than you do on stop losses. And like that was perfect. That's exactly what I would have done. And it's not to say that I'm going to get it right every single time, but it's exactly what I would have done. And yeah, and the double top's already worked out. I mean, if you look at it, I mean, that distance is already done. And where was it going to go? It was going to go straight to the level on the previous, like bang, down to the 50, last little mini roll reversal, double top, done. Okay, so that's trading 101. Love it. You didn't get the reverse, did you, Dave? You didn't short it again and go again, did you? Or you might have felt a bit greedy doing that, you reckon?
No, I didn't. I saw that little pin bar, or whatever they call it, shooting
that one
star
there.
thing. Yeah, and I thought, oh, this is going down. I'm good, because I was thinking about re-entering when it came back down on the 20, just in case. I was thinking about putting a half position on to see if it'd break the resistance. Get half in before it broke, and then whack the other half on when it did break. But I'm glad I didn't. Because then I saw the shooting star. Yeah. No,
I'm glad you didn't too, because that would have undone all the good work that you did here. Because when it failed to make a new high and it's coming back and testing the 20, that's really showing a sign of weakness, especially at a place of resistance. Now, could it go on and blast onto the stratosphere? Well, of course it can, but the chances are certainly more reduced. I won't lie. If I saw this candle, I didn't. I wasn't paying enough attention today. If I'd have seen this candle here, I would have taken the aggressive short on that double top and traded it to the neckline, and then I would have taken two trades there. I would have traded both of them, but I didn't see it. Now, what would we do now if we wanted to join in this short? If we believe that it's going short, and we've obviously missed the aggressive double top drop, we've missed the initial neck break as well. What would we do now if we wanted to take a conservative entry? Can someone tell me?
Retest the neck.
A retest of the neck from below. Yes. Who was that? Was that Amir?
Yep.
Okay.
The conservative one.
Yeah, 100%. And you know what? You've probably got your if it happens quick enough, you'll also have your 20 moving average there helping along the way as well. And I think that makes it quite a nice trade. What's that? Sorry?
MACD would be below zero?
Most definitely it will be. I would imagine it would be by then, yes. And that's a really, that's 3 trades in one. That's like a little mini Christmas gift, which is awesome. So can everybody, it's really important, everybody knows exactly what we're talking about here, right? Just make sure, give me a show of hands or comment. You do know exactly what we're talking about, why we would have traded it aggressively there, why we would have taken the neckline break, and why we would be looking for a retest of the neckline. Everybody does understand that, right? Yeah, great. Perfect. Good. Because that's really easy trading, right? That's how you're going to get the easy pip. That's the low hanging fruit, if you like. And just as importantly, everybody understands why here was the take profit zone. Hopefully you'll get that too. I think that's pretty obvious, but it's good to point it out because sometimes you can forget. But if you are in doubt, you just go to the bigger time frame, see the roll reversal, and You know, we coin all these phrases, and I hear, like, I do watch other people's videos sometimes just to see what everybody's on about, making sure that other people aren't, you know, advancing further with their technology than we are, to make sure that we stay ahead of the game. And I see them fumbling around, you know, where support, you know, does kind of become resistance, and it's a level of support and this and the other. It's just the role reversal, and people are afraid to use our coin phrases. I feel, because I know we do get copied a lot, but they don't like to use the actual. I find it amusing because they don't want to use the words that we use. They don't want to use lightning bolts. They don't want to use role reversals. All the things that we've basically made common knowledge, and they try to, you know, fluff it around and they're trying to say the same thing without actually saying the words, and it's actually hilarious when it's happening. You guys may have experienced it if you watch a few videos, but it's a dead set role reversal. Simple as that, okay? And that's all you need to know. When you got a role reversal, it was support, it's now resistance, happy days. You've got the 20 moving average there as well, of course. You've got a fib retracement that's very damn close. It's in between a very key zone. You've got plenty of reasons why you'd have been taking profit there. So, yeah, that's good trading on the Aussie. All right, let's go over to the CAD. Quite a few people have been shorting the CAD. And if you're shorting it from this resistance up here, very similar in a sense to what the Aussie was doing anyway. Like this has failed to break the 128 all year. Couldn't do it. Well, maybe not all year. Is it actually all year? Maybe it is. Yeah, all year. All right. The last time it was above was only just, but yeah, late 2020 was when it was above 128. It's had several attempts, many attempts to try and break this zone, and failed every single time. So that's on a weekly, right? So we know that this level is extraordinarily strong. I know that a lot of you longed it all the way to that level or got involved in this trend at some point, which is great. So, you know, I can see a lot of reasons why people would be shorting it from here. I didn't personally, mainly because I got a lot of the long, as you all know. So, and when I get that, I'm not that keen on the reversal, because it wouldn't have surprised me to see it break it. I think that's probably the point, and it wouldn't again surprise me to see it pick up steam here and blast on through. And because I have a feeling that may happen, because I think there's so much strength here, I'm just a little bit reluctant to take the counter, if that makes sense. And I think it's easy to say that and do that when you've actually taken a big piece of the long. It's a bit like Dave. You know, he got a good shot on the Aussie, and you know, he's almost like, you know, the short probably is there, but I think I'll just wait, and I'll wait for a bit more confirmation. And there's nothing wrong with that. And I think sometimes, you know, it's a case of, you see this and you think, well, you know, I got that long very low. You know, we've been talking about this for a while. And it wouldn't have surprised me to see it stop at the 20 and then get going. So even if I was going to short it, I would have taken it at the 20 anyway. I can guarantee you that. That all that, you know, mess in here would have pulled me out at around that 127. So it was only going to be a very short-term scalp anyway. So I kind of left it alone. But I can definitely see why people shorted it. There's no question about that. But how they got into it is interesting, because I couldn't really find a reason. And the reason, and when I say that, I mean, I couldn't find a good place to get in because it was so short. Like, this is the 1 hour, and as you can see, it's just it came nowhere near the 20. And I look at that, and I would have been waiting for the 20 anyway. Like, if I was going to try and short this even for a scalp, I wouldn't have just jumped in. I would have waited for a pullback. Okay. I didn't believe that pullback there. I mean, that was way too shallow. And the rest of them, it just didn't do it. And I would never take a pullback here after it's done all of that. Like, no way, it's just too far. So to me, it didn't give you a quality entry. I mean, if you went to a 15-minute, you'd find the reason, I'm sure. But that involves a lot more work, as you know. You know, we're going to have to watch it for a lot longer. So as you can see, let me just get rid of that for a sec. As you can see, if you were trading it off the 15-minute, you got a whole heap of entries. But this was all scalping, and you would have needed to be in front of the charts to get it, like literally. I was not, so I left it alone. But I'm assuming, though, the people who did short it, if they were following our system, were down on a 15-minute chart. And I reckon you had about, well, at least, I mean, they're everywhere. The entries are everywhere. You can see every touch provided a reason to sell until the very last one, and then it started to teeter out. And you can see I mean, you can see clearly here that it's starting to teeter out. Yeah, you can see it's starting to go sideways. So you kind of know when to stop. And I think that's the beautiful thing about just using this really simple strategy of using the 20 moving average. Like I said, the only thing with the CAD is, though, you would have to have been, sort of right time, right place sort of thing and watching it. And I certainly didn't have time to do that today, this week, that's for sure. This week has been a very, very busy week for us. So that wasn't going to happen. So I was doing a very quick scan of the 1 hour and the 4 hour. I don't make trades happen, right? I'll make that very clear. If, I know I can go to a 15-minute, I can go to a 5-minute, I'll find a reason to get in. But, to me, if I'm running short on time, I don't need to trade it every single day, and I don't need to trade every single pair. So if I look at the 4 hour and it's doing that, and I look at the 1 hour, and I'll bring it back, and it's doing that, and I can't see a logical entry point, I'm not going to go finding one because I really desperately want to be in this trade unless I've got the time to actually watch it properly. I'm not going to try and find a reason to trade it. I'm going to wait. If the opportunity comes up on the time frame that I want.
Can I ask you a question, Ty, about this?
Yeah, of course.
How about when it touched the 200 moving average from the down, and then you have a big red candle after that? Would you consider that entry, or I'm finding a reason to go down?
This one here?
Yes.
Yeah, I don't really count that as a pullback, because it's literally just, I mean, if we measure that in pips, it's really, really small, right? Like you're talking about, from top to bottom, you're talking about that bottom there is 127.55, and the height of that's 9 pips. So to me, it's not enough of a pullback to make it warranted. And also, it didn't really, the 200 on the 1 hour, it's there, and you sort of look at it and say, all right, well, you sort of, I don't know if it's going to pull it up. And even if you did take that trade, I'd be really worried about this level here. These two bottoms here, the roll reversal zone. So you're kind of only going, you're going to find a little bit of trouble almost straight away if you were entering at this point here. To me, if it had to pull back to the 20 at this level here, I would have given it a bit more, because that would have pulled back to a significant level. It would have pulled back to an 80 zone for starters. So 127.80 would be a good zone to pull it back. And that would be the entry that I'd be looking for, because then at least I know I've got about 40 or 50 pips before the next problem zone. Even though it didn't prove to be a problem, it certainly could have been. And normally, if it wasn't selling off so harsh, it would have found some sort of support there. So it's not enough of a pullback here to warrant it for me, if that makes sense.
100%. Thank you.
Yeah. So so I'm looking for more, definitely a deeper pullback, and to a significant level, but also a pullback that's not going to get me into trouble the minute I enter that trade. Now, again, I'm going to say it again, it didn't actually find any trouble. It just kept going. But that does not normally happen. It's very rare that you see one of the majors, have effectively, I mean, how many candles is that? Like let me just measure that. That's 35 bars of selling, without a reasonable pullback on a 1 hour. That's 35 hours, like it's a day and a quarter of, or nearly a day and a half of no pullbacks. That's unusual, and I don't generally get involved in unusual. If I feel a market's being a little bit unusual, a little bit like when the Aussie was pushing past, 75 cents. If it's looking a little bit unusual to me, I kind of just sort of leave it alone, if that makes sense. And that is unusual. If they were 15-minute candles, I'd say, well, all right, that's sort of 6 hours of systematic sell-off, but 35 hours of selling off without any pullback whatsoever. And none of it wasn't news related, it wasn't event related. You can see quite clearly here that these candles are all very measured and uniform. It was just selling with no respite. It wasn't like a big giant sell-off like that often rebounds exactly as fast as it came down. It was systematic, very orderly, but it was missing the one ingredient that we all require to actually join that and be in a healthy. Remember, lightning bolts mean healthy. Okay, that's the way I look at a lightning bolt. As much as it's price action telling you where it wants to go, it's actually a healthy market. A healthy market that is pulling back 2 steps forward, 1 step back is a healthy market. This, you know, you might look at it, if you were shorting it, you'd say, damn, that's a great healthy market. No, it's not. It's not because it's not pulling back. If you were shorting it, you'd be happy. Don't take me wrong. I mean, if you just took the the hit, say you were just aggressive, say you're just in an aggressive mood, and you're going to take the very, very first pullback to across there, and that's where you shorted it, and you aimed for a really low level, you'd be celebrating all this. You wouldn't want to pull back, of course, especially if you're going for this zone, and there's nothing wrong with that. But I'm just saying, if you didn't get that, and that would have been aggressive, you know, it was hard to get into after that, and that's not, you know, it's not orderly. Does everyone know what I mean when I say orderly? Like, does that make sense? It's not doing, you know, the right formation that a healthy trend will do. A healthy trend will come back, you know, at least, you know, 2 steps, 3 steps to 1 at the very, very worst. Not like that. Not 35 candles. So hopefully that explains it. But you know what? If you shorted it, that's awesome. And if you had the time and you were looking at the charts and you were able to go to the 15-minute and actually trade that, you would have had a bonanza. No question about that. But that comes down to time, right? So we're not always going to be able to, you know, sit there and watch it and be there at the right time. So that is, hopefully that makes sense. That's the CAD. The other one that I've had quite a few questions on, we've got a few in here as well. Let's have a quick look, make sure I don't miss anything. Kilted says he's counter trading most of the time. I don't doubt that, Kilted, but you possess the skill that that you can do that. You've been doing this a long time, and you know your levels. So I like countering just as much as the next person. Don't worry about that. And if I had time and all I was doing was trading and scalping, probably half the time, or maybe even more, would be counter trends. I love it, but it does require a little bit more skill, and you do have to be a little bit more, you know, on. You definitely have to be on. Hyro asked about oil near the 72.80 resistance. Prevailing trend is up. It's been bouncing up to 50 in 1 hour. Would I say that it's going up due to prevailing trend, or it depends on whether it bounces up or down? Oh, let's go straight to oil, because I have had quite a few questions on oil. So let's go to it, and then we'll have a look at the we'll look at the New Zealand as well. There's another one in there. The Dow is interesting. I'm not going to pay too much attention to that at the moment. We'll look at gold as well. Silver is still forming that base that we talked about last night. Nothing has changed here. As you can see, I don't mind this level. I've got to say, I'm going to watch it very, very carefully on silver. This is a pretty strong level on it. You can see here, I'll do the, you can see there, it had very strong bounce offs at this level here, right through there. I'm going to watch it with a lot of interest. It needs to hold here, make no mistake. But if it does, I think this might be the place that we can start to get a little bit excited on it again. I mean, gold will probably lead the way on this one as well. But I do like what I see here. I want it to, I'm hoping that it will hold. Because I think if it does hold, I think it's going to provide some reasonable opportunities to get some decent trades in on that one. Well, while we're talking about the commodities, let's go straight to gold. Gold is forming that base that we're talking about. I think all we're waiting for here is the higher high, higher low sequence on a 4 hour or a daily preferably. But it's starting to look like it's bottoming out here, doesn't it? I mean, I'm starting to see a bit of a rounding action here. I think I'm not going to be convinced until we've got a daily close above these moving averages. But I think once we get that, I think the party starts on gold. All right, so I don't want to spend too much time on it because I think there's not really a hell of a lot to talk about. We know that it's at that level that it has to kind of go from here. That's okay. We all know that. We all appreciate that. But we're waiting for the signal. Okay, it'll start with the 4 hour change of trend. If we get a 4 hour lightning bolt, I'd like to see it close above here. Okay. Ideally, probably just like if we can get above the 1800, that would be ideal. What I'd want to see is a lightning bolt that goes all the way up. That'd be great. A lightning bolt that pretty much finishes here. That to me breaks a lot of that area here. It breaks the moving averages, more importantly, on the 4 hour, and that's going to go a long way to being above the moving averages on the daily as well. And once it does that, it breaks its shackles, and I think that'll be really good for silver as well. So definitely one to watch, but still one of those ones where we've got a bit of an alert on it and hard to trade right now. Let's go to oil. And yeah, look, this is a funny one. I know the area you're referring to is pretty much the same area, the 20 moving average. I'm a little bit lower here on the line, but I think this is the you said 72.80. Let me just find that 72.80 is pretty much where it is at right here, this candle here. I do agree. I think it's I like it. Did everybody get that short from last week? Like, you know, when we said it could go either way, and it obviously went down. Did anyone get in the short on oil? Or not really? Maybe not. It wasn't that easy to trade. You had to pretty much be there, but it certainly played the game, especially on the. I've got to go back a bit now, especially on the smaller time frames. It was really giving. Once it did break, it was off and running. I look at it now and I say, you know, it's going to do. I'm not convinced it's going back into the 80s anytime soon. I know a lot of people, you know, all the great judges out there are saying it's going back to 85, and you know, look at it might, but I'm not so sure. You know, it's got a lot to do from a technical standpoint to do that. And I know people start looking at the news and they're starting to look at you know, inventory and this, that, and the other. And that is important, but sometimes you can get taken away, or people get a little bit carried away because sometimes that doesn't correlate to fast movement. You know, and what the what that shock and awe sort of does from those announcements can sometimes lead you to sort of forget about the actual technicals that are making it happen. So, you know, to me, this is a sticking point. No matter what OPEC says, no matter what the inventories are in any country at any given time say, this is an important zone. Okay, we know that because of the 20 moving average there, and it was always going to pull it up. So we don't need, you know, all of the fundamental noise to know this. And if you're trading it from this base, which is a reasonable level to pick it up, you know, that is the area that you'd be targeting, right? That to me is pretty straightforward. Yeah, can everyone see that? Does that make sense to everyone? How, you know, although we don't want to ignore news, we don't want to focus too much on it because inventories and OPEC meetings aren't going to tell you that. And that's my point. I think that although sometimes they do supersede technical analysis when they're actually happening, it's very difficult to actually trade off that information. So it's good to know, but you wouldn't want to be, you know, absolutely relying on it, or you're going to be waiting for a long time sometimes to put trades on, or you're going to miss some really, really good opportunities. So, you know, don't start with the hate mail, you know, that, you know, we don't do fundamental analysis and we don't care and it's important. You know, I know, of course, it's important. But what I'm saying is that, you know, if you're a technical trader, you want to measure the amount of fundamental news that you're going to take in, or you're going to get confused. Okay. When the two work together in sync, it's a beautiful thing. Don't take me wrong. It is a beautiful thing when everybody agrees. It's like it's in perfect harmony. But that doesn't always happen. And when, you know, we're a trading channel, right? Like we talk about trades. Yes, of course, we love investment. We love longer term investments. That's not really what we're doing at all of these weekly talks. We're really talking about the ins and outs of actually trading, day trading, weekly trading, swing trading. So, you know, for all of that information, you know, we're really going to rely on technicals a lot more. Now, occasionally there's going to be an OPEC meeting that's going to make it soar $4 or $5 in either way, and it's going to blow out every technical level and this, that, and the other. Does that mean the technicals are dead on it? No, of course not. It just means that the fundamental news that came out for that moment or that little period has overrun the technicals for that period of time. But I can tell you this, and I can tell you this with a very, very high degree of confidence, that for the times that fundamental analysis trumps technical analysis, which is going to be occasional when they're doing these you know, big announcements, for the most part, you're going to get a lot more trades if you're just using the TA. Okay, occasionally they're going to get blown out, but for the most part, when it's operating in a clean manner, the TA signals are going to trump the fundamental signals by a long, long way. And that's not just for oil. Yeah, that goes for gold. It goes for everything. So, and that's why we like it, because it gives us far more entries in it than than any other analysis type does. So occasionally one will trump the other, but for the most part, you're going to get a lot more trades using TA. And that's the most important thing, right? That's what we're doing. We want to trade. So yes, to answer your question in a very long-winded way, Hyro, yes, that is definitely the place that I would have been taking profit if I entered it here. I shorted it. I well and truly documented that. I said we were going short. All it needed to do was break that lightning bolt, and down we came. I didn't get it all the way to here. I actually took it out when it hit this zone here. Okay, so I didn't get. I got down to the 66. I didn't get all the way down to the 63, sort of 50 or anything like that. That was a bit of an overshoot. But again, I'm pretty conservative in my take profits. I'm pretty happy with the levels that I choose, and if it goes past it, that's all good and well. And I didn't get the long back up to that zone either. That's because I think I'm not sure why. I didn't see it for starters. I didn't see a good entry. I didn't see a good entry point for it. But yeah, I just missed it. But if you did get it, like I say, if you went to the smaller time frames and started, picking up off the moving averages, I can see why you would have done it. But this is if it was going to stop or at least take a pause, this is the level that it was going to take a pause at. Now, if it pulls back down a little bit and then starts to steam up and breaks the 20 moving average and closes above it, then I think it opens itself up back up to the 76, 76, 77 level again. Highly likely that will happen. Getting up here, it's got a lot of work to do for mine. And I would want to see a series of significant daily lightning bolts to make that happen. And if it does it, well, great. But I'm certainly not going to preempt it. And it's kind of funny, because people, a lot of people in say the OG obviously know that I trade, and it's amazing. I can't go and have a cup of coffee with someone asking me, where do I think the euro is going, or where do I think gold is going, or whatever. People who know me, right? They'll say, what are you trading this week, or where do you think this is going? Where do you think that is going? The truth of the matter is, we're only looking very, very short term. So, if someone said to me, where do I think oil is going to be in March of next year? I mean, I'm like, how the hell would I know? Like, in all seriousness, how the hell would I know? I could tell you there's no one on the planet that would know where it's going to be in March of next year. It could be $90 or it could be 50. Like, we don't really know. All we can do is measure what we've seen in the past and see the moves and identify levels of where it might reach in that shorter period of time. It's very difficult. Oil is not one of those. Oil is not like, say, a stock that you're going to pick up dividends on. You're going to buy cheap, long hold, and just let it appreciate in value like an investment portfolio. Oil is very difficult to do that with because oil is a moving mechanism that isn't going to appreciate to a continual appreciation all the way to $500 or anything silly like that, right? It's a trading commodity. So it's difficult to invest in oil. It's easy to trade oil, but it's difficult to invest it unless, of course, you picked it up at the extraordinary lows that we saw when we had the whole Contango effect and everything else, and when it was basically below zero. That was a different time, and very, very rarely is that ever going to happen in a lifetime. We may never see that again. So that makes a big difference. So we've got to understand which ones we want to trade and which ones we want to invest in. And oil is one of those ones that you want to be trading, just like gold is, right? And knowing that, it doesn't matter whether it's going to be. Who knows where it's going to be in March? We don't care. We're not investing in it. And we might get another 10 trades in oil before March comes along, and they may be on the short side, they may be on the long side. And that's why you can't get too fixated on where it might be in the long run. Like when we're talking about a commodity, right? This is what I'm not talking about stock. When we're talking about a commodity, because you're only caring about how it's going to affect your trade. If you're looking for a trade for a week, we don't care what it's going to be doing in 3 weeks. You might be in it 2 or 3 times after that. So, yeah, well, Australia, apart from the fact that the swaps will kill you, Dave, you're right, 100% on that as well. So it's really important to understand that. And I know people who don't understand that just think, is it now? Probably the one I get asked the most, and you guys will probably all appreciate this, is that, Ty, I'm going to the US next year. Is now a good time to actually swap some Aussie dollars for US dollars? If I could get $1 for every time I heard that one, and Thomas will tell you the same. It's like it's amazing that people think that you've got like your finger on the button and you know exactly what's happening and when it's going to be. I can assure you we don't. We are guided by what's happening tonight, what's happening tomorrow morning, what's happening on Monday. We look at the markets on a daily level and actually see what's happening at the time. We're not trying to predict. We're not Nostradamus. We're not trying to predict where it's going to be. We have belief of where it may be, but in the end, we wait for price action to confirm. So people say all the time, oh God, you guys must be really good traders. I wish we could trade like you. I wish we could predict the markets. We're not predicting the markets at all. All we're doing is identifying levels where we think it on given behaviors, levels like support and resistance, where it should be and where it can be in a particular time. And then we wait for the evidence before we get in. That's the key. If we were absolutely adamant that oil was going back to $85, right? Say we were a guru, and you see them on TV all the time, the gurus. If we were a guru and we said, hey, oil's going to $85, well, how it gets there is irrelevant. You just buy it and hold on to it until it gets there, right? But is that actually trading? No, I wouldn't have thought so. Anyway, not in my book, it's not trading. So, and if it gets there, you're going to say, well, awesome. I've actually, my belief was right. It got there and I've just entered. But the problem with that is that you haven't waited for any evidence to do that. You've taken it on either a belief or on somebody else's belief that's going to a certain level, and to hell with the evidence. What Thomas and I do, and I think we do it relatively well, is we certainly predict the level in a sense that we think this is where it could go, but what we do is wait for the evidence that it's actually doing it before we actually trade it. And then and by that, when I say evidence, I'm talking about the lightning bolts, I'm talking about the breaks of key zones, I'm talking about momentum. And when it does that, great. And it looks like, oh wow, you guys really know what you're doing. Well, actually, we don't really know 100% for sure that that's what it was going to do, but it gave us the evidence that it was going to do it. So all we did was follow a plan, and when the momentum picked up and did it, we joined. And that's what I'm saying. You don't have to be a market wizard. You don't have to be a market guru. You don't have to be able to predict the future. That's not what trading is about. If you think that's what it's about, you're going to be probably a bit disappointed, because you're going to be wrong probably more times than you're going to be right. You wait for the evidence. Okay. We don't arrest somebody for murder because they're dressed like a tattooed hooligan who looks like he could definitely commit a murder. We don't do that. We want evidence. Does he have a knife? Does he have blood on his hands? Does he have DNA? Then we say, you know what? You're going to jail. You are a murderer. That's exactly what we're doing with the market. We don't just assume that it's going to do something because it should, or it looks like it. We wait for the evidence. And if we get the evidence, we trade it. And trading is as simple as that. And I know I'm probably making it sound a lot more simple than it actually is. And I know you guys, know that it's not quite as easy as that, but in a sense, it kind of is. That when you do get momentum and you get evidence on your side, it stacks the odds extraordinarily high in your favor of being right. Okay, and that's what we want as traders, right? It's not. We certainly don't want to be going the other way. So hopefully that makes sense. That's my words of wisdom for the night. Does that make sense, Amir and Dave and Kilted?
100%, yes.
Great. And they're not just words, right? I really mean them, right? I mean, they're not just words. It's actual fact. That's fact. We never take a punt on a level and say we're shorting into that level. When I said the other day that I'm going to be trading the Aussie, there's a huge chance that the Aussie was going to go down to 70 cents. Where is it? Like when we thought that level was going down to 70 cents, we're not we're not Nostradamus because it got there. We traded that level because we believed that was the first real support, but we didn't just jump in. I mean, I thought it was going to 70 cents way up here, but I didn't jump in on that candle because that's what I believed. I waited for the pullbacks, the right pullbacks to happen. And when they did happen, that's when you join it. That's how you do it. It's not, we're not making the market do what we want it to do. We're working with the market. And I think you almost have to believe that. and Dane's here. I mean, Dane's big on the psychology of the market. He knows what I'm talking about. The minute you think you're controlling the market or the market's doing your bidding, that's when you're completely screwed. Like you're going to be screwed in a big way, because all you're doing is getting lucky, right? You do not make the market do what you want it to do. You work with the market and let the market prove to you what you want to see. And when it does that, just because it's done it doesn't mean we've got the market on a string. It just means that the market's behaving in a predictable manner, and we're able to read that predictability by its actions. And it's as simple as that. And I know, for a fact now that nearly all of you guys I see all the time are doing this and doing it successfully. So I know that it works. I know I've known for many years that it works, but it's a repeatable process, and that's why trading, in a sense, for us, teaching people our method is very, very satisfying for us, because we know that it works. We can do it successfully, and now we're seeing a whole big range of people doing the exact same thing and doing it successfully, and that makes me so proud, because we're able to, I guess, pass on our the things we've learned to stop you from making the same mistakes that we did. And if we can do that, and it saves you a hell of a lot of heartache and pain and money, then I think we've done our jobs well. So yeah, I'm pretty happy with that. That's really, really good. So yeah, that's really good. I know. There's a couple more that we have to get through, because I know time is getting away from us. Let's have a look at the New Zealand USD. Yeah, we're definitely going to look at that in a second. But yeah, Dane just says, if you do a lot of waiting, it'll do what you want most of the time if you wait. 100% right. And yeah, for those of you who did the options webinar yesterday, and it will be available to everyone, because that was a public one. That was the first and last public options webinar. The rest of it will be for members only, because you've got to understand, otherwise you'll have no idea what we're talking about in the options world. The beautiful thing, Dane, I'm not sure if you were there, but the beautiful thing about waiting is that when you use options and mix options into it, you're able to actually make money while you wait. And there's nothing better than that. Yeah, I don't think anyway. Getting paid to wait, and if you're right, you make more, and if you're not right and it doesn't get there, well, you still make money. Doesn't get better than that, does it, Kilted? I wouldn't have thought. Let's go to the New Zealand USD. Where are you? Here we are. All right. Smaller time frames. Really still waiting for the breakup. It hasn't really broken the zone that we really want broken properly. You can be forgiven for getting in. That candle could have definitely got you in. I am if we break this level here, I'm very, very confident we're going to 69 or high 68s. This could be just a little bit of a pullback. It's still looking strong. I mean, I don't mind this. I don't think it's not doing anything that's overly scary yet. You could argue that's a bit of a double top. Yeah, it is, but at the same time, it's not really like where the Aussie was, at a level where you'd say, this is an awesome level. There is a little bit of there's a bit of support here. I still look at this and I think to myself, it really wants to get to that 20 moving average on the daily. So I think you could definitely be forgiven and the only reason, and Dave, I'll let you in on a secret. The only reason I did not get in on that candle was simply because I wasn't in front of the charts when it happened. Because if it was, I would be in it. Absolutely, I would be in it. But now that it's done that, I'll wait. Again, I'm not just going to jump in. But if I see any sort of change of price at this level here on a smaller time frame, if it happens in the time that I'm awake tonight or tomorrow morning, I will be absolutely in this trade. That candle, most definitely could have got you in, and I'd still not be scared of it. I think that it's got good potential. The dollar index, we'll quickly have a touch on that. So does anyone have any questions on the New Zealand, on the US dollar New Zealand? Or did you just want to have a look at it? Are there any actual questions or?
Oh, I just wanted your opinion on how you thought it was going. That's all.
Yeah, like I said, I think that I mean, I want this 20 to hold. I'm not going to lie, the 20 needs to hold here. But it's pretty much, it's at a very similar level that we were actually talking about it on Tuesday. So it hasn't really done it yet, but I still have belief in it now. The only thing that's happened now is more time has passed, and because I'm not in it, I'll wait for it to break this level. But let me tell you, the minute a 4-hour closes above this level here, in, most definitely. So yeah, and MACD is about to cross positive on the 4-hour. I think it's okay. Daily still looks strong.
Yeah, I was just going to say, I think the reason you didn't see it get up there was because it happened at about 3 o'clock in the morning, Ty.
Yeah, and that often happens. I do miss a lot because of that. I do. But I mean, look, when I look at them, when I look back and see them working out, I still give that a tick in my head and say, yep, successful trade, even though I'm not in it, because I say, well, I would have been if I was awake, and you're not going to get every single one of them. So, but I still look at that, and I don't think this has failed in any way, shape, or form. I mean, it would have been nice if it picked up here and kept going, but it's still got the 20 moving average to catch it, and we'll let this area hold, and if it does and makes a new high, I think plan's still on. I think it's still got plenty of upside. It's got again, I think the 20 daily is calling it. It's been a long time since it got there, and I think this is just trailing what the Aussie USD was doing. It's just being a little bit slower in doing it. So I wouldn't be afraid of it if you're in it, and if you're not, just wait for that break, and I reckon off we go. I've had a lot of people ask about the S&P 500. This is obviously too late because I'm getting bombarded with questions in emails for people who are not able to come in here. So it's obviously too late. 10 p.m. is a bit too late. So what we'll do next week will be the final one for the year anyway, because it's the last week of trading for us really. We will do we'll do it at the same time next week, so we don't we'll keep the same time frame. But I think when we kick on again in January, we'll probably bring it down a bit early. I think it is a little bit late for people. Too late? Everyone's saying too late.
Way too late, Ty, way too late.
Fred, fair enough. No, I understand. I do understand, and it is late. It is late. And I'm gathering that because, like I said, I've got I reckon I've got about 10 emails of questions from people who aren't here simply because it's just too late. That's okay. I understand that, but we'll keep it going for one more week, and then we'll get it back down to that sort of 8:30 again.
It's okay for us Queenslanders.
Right. Yeah, of course.
I'm not whinging about it, Ty.
You're not whinging about it? Yeah, no, I can understand that. Yeah, it's hard, like it's hard to make everybody, make it perfect for everybody. Of course, I do understand that. I don't mind doing. To me, it doesn't really matter. I mean, I don't mind my Thursday nights doing it a little bit later because I get to spend a little bit of time at home up with the kids after dinner. We can watch a bit of telly, just sort of relax a little bit, and then I don't mind doing it late. But to me, hours are kind of weird. So I could be up till 11 or 12 o'clock at night, and it's very normal. But I can understand that people, not everybody's like that, so I'm not going to be. So I'm not going to do that to you. We're not going to be doing midnight ones. Well, I think Monica's just jumped in. I'm sure Monica would be happy if we started doing midnight ones. It'd be okay for her. I know this is very early in the morning for her, but yeah, that's what we're going to be doing. We'll do it at 10 again next week, and then we'll look at dropping it back to make everybody happy. I'll listen to the crowd. Yeah, so no, I hear you, Kilted. Look, there's probably if we do it at 8 o'clock, it's going to suit a lot of people. If we do it even later, it's going to suit a lot of people. But look, this is why we record it, and quite often the Q&A, as good as it is to be live because you can actually ask questions, a lot of it's not really that timely. So it means that you can actually, if you miss it, you can watch the replay and still benefit, because a lot of it is actually learning and sort of picking my brain a little bit on what's actually happening, which is my favorite thing, because I actually, of all my sessions every week, I reckon this is probably my favorite. This is the one I enjoy the most because I think we get some really good messages across, and and the Wednesday night webinars are good too, but we get a lot of requests in those ones, as we get we have to go through 1 million pairs and stocks, and sometimes they can be a little bit quick. I mean, look, we spent 20 minutes on the Aussie today, and we weren't even trading it. So but we learned a lot. I mean, we talked about all the setups and stuff, and I think that those lessons are far more important than actually trying to find, where the next 20 pips are coming from. So that's what Wednesdays and Tuesdays are for. So yeah, fun with Ty. No, and won't you know it, Dane? When you're up at Cairns, won't you know that in about? I think we're nearly in the. Well, we'd definitely be in 12 weeks now, wouldn't you? I think we're about 11 or 12 weeks away, and it's drinks on Tom. We are going to make him pay, and we're going to make him shout. I'm pretty confident of that. All right, let's go to the last one we'll have a look at is the S&P, because I've had a lot of requests for it. S&P feeling the heat at this level, no surprises. Is it going to break a new high? I've got absolutely no idea. I'm not going to lie, but I do look at this and I say to myself, that MACD is nearly in the zero. I mean, if you want to see MACD divergence doesn't get any bigger than a very, very high peak to nearly zero. So I look at that as a big, big warning sign. I wouldn't just listen to that, of course, but I'm very aware that we are at all-time highs. A lot of I heard a lot of talk today that people think it's going to go to 5,000 before Christmas in the Christmas rally. Look, anything can happen, I guess. Does the market momentum justify it? Not so sure. I would need to see a very, very solid break of this level for that to happen. So really, price leads the way here. If it weakens off again and starts to drift down, I worry for this level. I'm not so sure it'll hold. Okay. But if it does, break higher, I'd be very, very wary of fake outs at this level, especially on the daily time frame. But if we get a daily close above it at a new high, that's probably what it'll be, the catalyst to start looking at new highs. I'm never a really big fan of trading at all-time highs, because it's very difficult to predict the next target. You're really, although you can sort of look at round numbers and you can put fib extensions on this, that, and the other, when you're in uncharted territory, it can be a little bit of a guess and check. That's not really my style. I'm not saying that it's wrong, but I think it does make it difficult. So I think there are easier trades than that. So to me, if it does get a close, I would probably sooner let it break higher. And exactly what I'm going to say, let it break higher, come back and test this level from the top, and then take the easy money to the previous high. Love that. That's my favorite stuff. Let all the peons do the work first, and then come in and take the glory, if you like. That makes it the easy trade. And of course, if it looks like it starts to short off this level, then I think we've got a very clear target in the interim as well. So I think that two ways you can play it, but right now it needs to do something, and I wouldn't be taking a guess. I think if you had a shot at it right now, I think you'd almost be having a guess. And that is not what we do, Dave. We do not guess. So, all right, everyone, thank you so much for joining us. Been a fantastic hour. I will be up nice and early for Friday wrap. We'll see if the market gives us any fun tonight. See, we've got something to talk about and some moves for next week. But yeah, failing that, I think that we've got some key levels that we need to look at. I think we can trade to them and let everything unfold. Thanks, everyone, and I will see you all in the Discord room.